Now let's look at our Your Stock, Our Take segment. We're going to look at a company called Quarterhill. Its symbol is WIN on the TSX. They were formerly known as Wyland. It is currently trading around $1.89. Market cap's around 221 million. Our question came from a longtime client this week who's looking to deploy some of the capital he made on a company which he purchased on a recommendation of ours at the start of this year. The company that he had bought was called International Road Dynamics. IRD on the TSX was its symbol. IRD was purchased by another Canadian company. That company is Wyland. And our client asks if it would be a good idea to purchase shares in Wyland, which is now Quarterhill, to continue to participate in the anticipated growth of International Road Dynamics as they now own them. That's a great question. It sounds like a potentially solid strategy. We were asked this question actually back in April when the acquisition happened and occurred. Wyland, because we really liked International Road Dynamics business. We advised clients at that time, however, to take the cash as we looked unfavorably on Wyland's business and did not feel the leadership group had shown any ability to create shareholder value over time. At that time, Wyland shares were trading around $2.75. Today, the shares trade lower by a third at around $1.85, $1.89. So what does Quarterhill/Wyland do? Well, Wyland historically had operated as an intellectual property or IP licensing company. The company's patent licenses cover a variety of markets and relate to a diverse set of technologies, but essentially the company acquires patents, then negotiates through litigation or other means with companies for settlements for them to license their IP or intellectual property. Now, on April 17th of this year, the company announced that it would change its name from Wyland to Quarterhill. Now, I'm not sure what to make of the name, but it kind of sounds like they're about 25% up some kind of a hill. But anyways, the new growth strategy of Quarterhill will focus on acquiring, this is what the company has stated, technology companies in the Industrial Internet of Things, or IIoT segment, across multiple verticals. Now, for a company that has already, quote unquote, pivoted its business strategy twice in the past 4 years prior to this, attaching itself to the Internet of Things appears, in my opinion, to be a bit desperate, like the company is trying to attach itself to a hot buzzword of the day. Now, in the end, it'll all come down to how effectively the company deploys what at that time was about $150 million in cash that it had in the bank, and the company had no debt. So as part of this strategy on that day, on April 17th, the company also announced its intention to acquire all the outstanding shares of IRD, or International Road Dynamics, stating it was its first foray into the industrial Internet of Things market. Now, we consider IRD a good company. Obviously, we recommended it, but we have interviewed management a number of times and looked at all the company's most recent quarterly reports, and not once did management refer to itself as an Internet of Things or industrial Internet of Things play. So at first glance, we applaud Wyland for identifying what is a good company with strong growth products. However, to profit long-term, you have to buy great companies at great to good prices. Now, IRD was acquired for around $63.5 million. If we look back over the last 4 quarters, IRD posted $2.1 million in earnings. So Wyland paid over 30 times earnings for IRD. Again, we were happy to take the huge payday on our shares, but Wyland did not buy the company on the cheap, near term at least. While we expect IRD to continue to grow and see strong potential, we do not believe Wyland had to pay such a steep price. Now, Quarterhill has now completed 2 acquisitions since announcing its new strategy. On May 4th, 2017, the company acquired Vizia Corp. It's a privately held software and as a service company providing multinational companies software and services for they bought the company for around $40 million. Now, as a result, effectively today, Quarterhill has now, three wholly owned subsidiaries. So International Road Dynamics, Vizia, and Wyland. The company has stated that Vizia posted around 4.3 million in adjusted EBITDA for the last 12 months. We know that Vizia was all ready to go public prior to this acquisition, as what was known as a qualifying transaction for its TSX venture listed capital pool for a more reasonable price. It was going public prior to this, but Quarterhill swooped in and offered more, and the company went for the higher offer, as it should, and was purchased by Quarterhill. So the point being now, is Quarterhill a buy? We see that I can see what the company is trying to do, and the idea of creating a growing cash producing business that is less lumpy than its IP type business is a great concept. But for shareholders to be rewarded, the purchases must be at smart prices. Quarterhill has now spent about 104 million of that 150 million they had in the bank, and has acquired about 8.4 million in adjusted EBITDA. This effectively added around 7 cents per share in EBITDA to the company. So if you put a 12 to 14 times multiple, which is generous, on the value of what that EBITDA that it acquired, and you get about 85 cents to $1 in value in the business that it's acquired. Now, prior to the acquisition, the existing business was being valued at $1.15 if you remove the cash that was there. Subsequent to this, the Wyland patent business, subsequent to this, posted a terrible first quarter. And when I say terrible, I mean it was god awful. It appears like the type of quarter that management saw coming and then rushed out to make two high-profile acquisitions and push them over the finish line to prevent a complete share price carnage situation. The quarter unto itself, we believe, would have cost the business half to a third of its value. It is therefore not surprising to see the new Quarterhill company trading right where it is, around $1.85 to $1.90. Now, perhaps some lumpy income windfalls from its parent business, or patent business, will allow the company to purchase more good businesses. Over time, the business will grow stable and consistent cash flow businesses that it has purchased. All we see at present, however, is a management group that has managed to pay far too much for its assets, and it will take a number of years to see those earnings that they've purchased backfill and start to reward shareholders with those assets. We like the two businesses that are purchased, just not the price tags. We will monitor it now, but do not see it as cheap given the track record of management.